Welcome everyone to another video. In this part 2 of the EMA Clouds series, we will be going over how to use EMA Clouds to manage your trades. If you missed part 1 of this video, please check it out. As a refresher, EMA Clouds pairs two set of EMAs and forming a cloud-looking imagine in your chart. The color of the cloud changes when the two EMA crossover, creating a clear visualization that signals the potential trend change. EMA Cloud Indicator is a tool that can be used as a part of your technical analysis to assist you manage your trades. There are many ways to use EMA Cloud. For instance, you can use the EMA Cloud in conjunction with Fibonacci retracement, you can pair it with range breakout, simply use it along trendline, or combine it with any of your preferred indicators. There can be many combinations. For the purpose of this video, we will be looking at how to utilize EMA Cloud alone to manage your trades. Once you have learned how the EMA Cloud works, you can tailor it to fit in your trading strategy. First, let's take a look at an example of how to use EMA Cloud to manage intraday trading. The time frame I used in this example is 10 minutes and the EMA Cloud I used is the 5 EMA and 12 EMA. This is the 10 minutes chart of Tesla. I have set up the color on the EMA Cloud, so that when the 5 EMA cross over the 12 EMA, the cloud changes to green, and when the 12 EMA cross over the 5 EMA, the cloud changes to red. For those of you who are interested in how to set up EMA Cloud on TradingView, please check out part 1 of the EMA Cloud video. In this chart, we can see 3 trend change pattern: uptrend, downtrend, and uptrend again. Notice how to the EMA Cloud color changes corresponding to the trend change. Early part of the day the stock is on an uptrend and it's riding the EMA Cloud, the EMA Cloud is green, from here the cloud changed to red, suggested a potential trend change, and see how the stock changed to a downtrend, from here the cloud changed to green again, where the stock started trending high. EMA acts as a trend line on the 10 minutes chart for intraday trading. The uptrend stays intact as long as the 5 EMA stays above the 12 EMA or the 10 minutes candle does not open or close below the EMA Cloud. When the 12 EMA cross over the 5 EMA, it indicates a potential trend change. The rule of thumb is that you long a stock as long as the 5 EMA is above the 12 EMA, and you short the stock when the 12 EMA cross over the 5 EMA. Now, let's drill into details in this 10 minutes chart to examine how we could use EMA Cloud to manage the trading opportunities in the 3 trend change pattern. First, let's take a look at the trading opportunities in the first trend change pattern, red to green. The stock closed in red EMA Cloud. We see that in the pre-market EMA Cloud changed to green, however, the last pre-market candle closed below the EMA Cloud, so you would wait and see which direction the stock is going when it is open. The stock opened below the pre-market and bounced back right away as it is forming the 10 minutes candle. You could start to long the stock once the price is above the EMA Cloud, which is at $675.74, and set your stop loss just below the cloud, which is at $673.11. It is important to note that there are many different entry and exit points to trade this uptrend pattern. Different traders would have traded differently. However, in this example I want to show you 3 exit points to illustrate how EMA Cloud works. The first exit point is the best case scenario. The stock is on a strong uptrend and it's riding above EMA Cloud. It reached high of $694.48. If you ride it all the way up here, this trade would provide a risk to reward ratio of 1 to 7. It would be an amazing trade. The second exit point is by following the EMA rule. You exit when the candle closed below the EMA Cloud, whereas when the stock reached $687.39. By taking this exit point, this trade would provide a risk to reward ratio of 1 to 4.5. The third exit point is by waited until EMA Cloud actually changed to red, which is when the stock reached $687.75. By taking this exit point, this trade would provide a risk to reward ratio of 1 to 4.4. Now, let's take a look at the trading opportunities in the second trend change pattern, green to red. The EMA Cloud change to red indicates a potential trend change, which suggested you could flip to the other side and starting to short the stock. Even by using EMA Cloud alone, you could have 3 different entry points in this trading opportunities. First entry, you could start shorting the stock when the 10 minutes candle closed below EMA Cloud. The second entry is when 12 EMA crossed over 5 EMA. The third entry is when the EMA Cloud has changed to red. In this example, we will be using the third entry for illustration purpose, which would be when the stock reached 687.75. Your stop loss can be set just above the EMA Cloud, at $688.41. The first exit point is the best case scenario, where the stock reached $681.82. This trade would give you a risk to reward ratio of 1:9. The second exit point is by following the EMA rule. You exit when the candle closed above the EMA Cloud, where the stock reached $685.39. This trade would give you a risk to reward ratio of 1:3. The third exit point is whereby waited until EMA Cloud changed to green, which is when the stock reached $685.76. This trade would give you a risk to reward ratio of 1:3. Keep in mind, in this example we are using EMA Cloud alone to manage trade. If you combine the EMA Cloud with other indicators or strategies, you may have many different entry and exit points depending. Let's take a look at the trading opportunities in the final trend change pattern, red to green. The EMA Cloud change to green indicates a potential trend change, which suggested you could flip back to long the stock. You could start long the stock right here where the candle closed above the EMA close, where the stock reached $685.39, and set your stop loss just below the EMA Cloud, which is at $683.83. If you ride the next candle up, when the stock reached $688.50, this trade would give you a risk to reward ratio of 1:2 in about 10 minutes. The second exit point is the best case scenario, where the stock reached $689.72. This trade would give you a risk to reward ratio of 1:2.7. No matter which candle you get out of this trade, this would be a winning trade. Some of you may notice that in the first trend change trading opportunities, the stock jumped almost 20 points from our entry at $675.74 to $694.48, and the trade provides a risk to reward ratio of 1:7. However, in the second trend change trading opportunities, the stock dropped only 6 points from our entry of $687.75 to $681.82, but that trade provides a better risk of reward ratio of 1:9. Risk to reward ratio does not 100% correlated to stock movement, it is also based on entry point and stop loss. Better entry point, appropriate stop loss will increase the chance of having a good risk to reward ratio in trades. 1:7 or 1:9 risk to reward ratio are very good setups and they may not commonly seen. However, in these examples, we are illustrating how you can use EMA Cloud to time your entry, set your stop loss and manage your exit point to achieve your goal. It is important that you find the optimal setups that matches to your risk to reward ratio before entering a trade. Remember, you only need to achieve 34% success rate to be profitable if you can maintain your risk to reward ratio at 1:2. If you want to further understand success rate and risk to reward ratio, please check out my video of risk management. Hope you find this video helpful. Please comment below and share your favorite EMA Cloud strategy. Let me know for the next video, if would like me to go over how to use EMA Cloud to manage swing trading. Or combine EMA with other strategies such as EMA and Fibonacci retracement. Thank you for watching. If you have not already, please like, share, subscribe to the channel and turn on the notifications so that you will be notified as soon as I upload future videos. See you all in the next video. Good luck with your trade.